Hey there, and welcome to today's Explainer. So, if you're a new small business owner, or maybe you're thinking of becoming one, I bet you have a deep passion for your product or your service. You've got the vision, you've got the drive, and you're ready to take on the world. But we need to confront a really harsh, sobering reality right out of the gate. Most businesses do not fail because their product is bad. And they definitely don't fail because the founder didn't work hard enough. They fail because, simply put, they just run out of money. You might be looking around your busy shop or watching customers flock to your website, and your sales look amazing. Yet somehow behind the scenes, the business is literally dying. Why does this happen? Well, that's exactly what we're going to unpack today.
The core reason for this disconnect is a massive misunderstanding of what actually brings stability to a business. As a rookie owner, it is so easy to fall into the trap of watching money roll in and feeling safe. But here's the truth. Revenue is absolutely not the same thing as financial control. Revenue is just your top line. It's the raw activity. Financial control, on the other hand, that is your steering wheel. It's understanding exactly how that money behaves the second it enters your ecosystem. Without financial control, high revenue can actually accelerate your collapse because you might just be scaling up your losses without even realizing it.
Okay, let's dive into this. Here is our exact blueprint to get you to a place of total financial confidence. Part 1, the biggest myth. Part 2, 3 numbers you must know. Part 3, the 3 secret documents. Part 4, rules for business survival. And Part 5, master finance. All right, Part 1, the biggest business myth. Sales equals success. Let's bust this misconception right now. It's super common for first-time entrepreneurs to just assume that selling more automatically means they're doing better. Let's set up a quick scenario. Imagine you've just launched, you've been grinding for months, and boom, you finally hit a major milestone. You sell $100,000 worth of your product. Honestly, seeing that 6-figure number on your dashboard feels incredible. You're probably popping champagne and congratulating yourself on a huge win. And hey, you should be proud. That's a ton of sales volume. But this number is a total trap if you don't look deeper. Prepare yourself for the margin shock, because out of that 100 grand, you do not get to keep it all. Far from it. You've got to pay rent for your workspace, you have to make payroll for the team that helped you sell it, you've got all the marketing costs that brought those customers in, supplier invoices for raw materials, and of course the government is going to take their cut in taxes. When you subtract all those expenses, let's say they total $95,000, you're left with a razor-thin $5,000 in actual profit. This right here is why margins matter significantly more than pure sales volume. If your margin is this tiny, literally any small hiccup, like a sudden bump in supplier costs or just one slow month, can wipe out your profit entirely and throw you into the red. A massive revenue number is just an illusion if your expenses are eating it all alive. Moving right along to Part 2, 3 numbers you must know. To stop that margin shock from catching you off guard, you need a solid system. Number 1 is revenue. Like we just talked about, this is all the cash flowing into the business from your customers. It's your gross income. Now, even though we just established it isn't the final measure of success, it is absolutely the vital starting point of your financial journey. Look, without revenue, there is no business to even measure. It's the proof that people actually want what you're selling. Number 2 is profit. This is what's left over after every single one of your operating expenses is paid. Think back to that tiny $5,000 slice we just talked about. Profit is what actually ends up in your pocket. It's your reward for taking the risk. It's the metric that tells you if your business model actually works. If your revenue is sky high but your profit is 0, you aren't really running a business. You're just facilitating transactions for everyone else. And number 3 is cash flow. This tracks the actual physical movement of money in and out of your bank account in real time. This is all about timing and honestly survival. I really need you to hear this loud and clear. A highly profitable business on paper can still completely collapse if the actual cash arrives too late. If your customers have 60 days to pay you, but your payroll is due every 14 days, you have a massive cash flow crisis on your hands, no matter how good your profit margins look. Cash flow is the oxygen your business is breathing today. Okay, Part 3, the 3 secret documents. Now that we've got the theory down, let's introduce the practical diagnostic toolkit. There are 3 vital documents you need to look at. First, the income statement. This shows you the money earned and spent over a specific period of time, which reveals your ultimate profitability. Second, the balance sheet. Think of this as a snapshot of your exact financial position at a single moment in time. It compares what the business owns, your assets, against what it owes, your liabilities. And finally, the cash flow statement. This reveals your liquidity. It tells you whether the business actually has the physical cash available to operate right now. As a mentor to your own business, you have to look through all three of these lenses. Relying on just one is going to give you a dangerously incomplete picture. Which brings us to part 4, rules for business survival. You've got the toolkit, now we need to talk about your daily habits. Here are 5 simple, totally non-negotiable survival rules to keep those numbers in the green. 1. Track every single expense. A $50 software subscription here, a $100 lunch there. These tiny leaks will absolutely sink your ship if you don't track them. 2. Separate your personal and business money immediately. Mixing funds is the fastest way to blind yourself to your business's true health. Go open a dedicated business account today. 3. Create budgets. Give every single dollar a job before you spend it. 4. Know your break-even point. You have to know the exact dollar amount you need to generate each month just to keep the lights on and pay yourself zero. And 5. Review your numbers weekly. Please, don't wait until tax season to look at your dashboard. Financial control requires you to be wide awake at the wheel. Finally, part 5, master finance, control the future. Once you've nailed those survival habits, it's time to scale up without losing control. Growth is incredibly exciting, right? But true growth isn't just about blindly spending more money. It requires data-driven decisions. As you look to expand, you must ask this one specific question for every single dollar you are about to spend. Will this create future value? Smart, resilient businesses treat money like essential fuel to propel them forward, not as a decoration just to make them look bigger than they really are. Whether you're thinking about hiring a new employee, buying expensive software, or renting a larger office, if the answer isn't a clear yes backed up by your numbers, you don't spend the cash. As we wrap up today's explainer, I want to leave you with this thought. Master finance. Control the business. Control the future. Winning in business isn't about being the person who just works the hardest or stays up the latest. It is won by the person who fundamentally understands exactly where their money goes. Your passion, that got you to the starting line, but your financial discipline is what will actually get you to the finish line. So here's my question for you. What is the very first expense you are going to audit today to start taking back control? Start right there and watch your business transform. Thanks so much for joining me, and keep building smart.